Hi, and welcome again to another edition of Market Analysis for today, Thursday, the 14th of November, 2024. I'm Giovanni Benacourt, and this is a recording previous, about 45 minutes previous to the U.S. Open. All right, well, let's get to it. It's true, markets are typically forward-looking, but they can also be selective. Now, investors seem happy to downplay some longer-term pain in favor of short-term gain. President-elect Donald Trump's victory rally is rumbling on, albeit at a slightly more stately pace for now. The S&P 500 eked out another day of gains yesterday. That's 6 out of the 7 past 7 days. Investors are feeling relaxed. The market's fear gauge index fell to a 4-month low yesterday. Not even an uptick in inflation took the edge off the good vibes. The consumer price index rose at an annual rate of 2.6% in October, up from 2.4% in September. Crucially, it was in line with expectations. In a parallel universe, such a rise may have hurt stocks or even dampened rate cut expectations. The opposite happened. Traders are growing in confidence that the Federal Reserve will cut rates by another quarter point in December, but the outlook for interest rates in 2025 is only becoming less certain. The market is currently pricing in a half point worth of cuts by June a month ago. They were predicting a full percentage point cut from current levels. The possibility of inflationary Trump policies is perhaps being priced in. While puzzling at first, yesterday's reaction makes sense. The Fed can't preempt Trump's policies and can only look at the data. Stock markets aren't missing the future. Risk is there for all to see as long-term treasury yields creep higher. Investors are just choosing to seize the day as Trump trades continue to lift sentiment. At some point, that will change, possibly when the president-elect takes office and starts settling out his policy agenda. But for the time being, though, the Trump trade seems to be all that matters. So with that being said, let's take a look at the market. Let's begin with the NASDAQ. So we are here in a daily candlestick and that NASDAQ. We are basically in range. We are in range in, let's say, half of the fluctuation of November 7th. So all the news coming out, all the data coming out, pessimism from one side, positivism from the other side. So will the market tank? Well, I just said Trump trades seems to be all that matters. So I assume that next week, perhaps today, this week, there's still some more of filtering noise out. We'll see some more volatility. Now, volatility right now, as the VIX is pointing out, is the fear gauge is low, so the volatility is positive because the market aren't dropping. So 21,000 could see as a nice round psychological number where the market perhaps will find a lot more participants and waiting to start at that 21,000 level to the upside. Or we could just, for today, as we've seen so far, the same behavior as the previous days in the NASDAQ. Now the S&P 500 is a completely different story. Here, we have been moving in the positive direction, and we're still within just the high is 6,052, and so far today the low is 6,003. Okay, so 49 points lower from that high, but yet we are above that 6,000 psychological round number. So will today be the day that it will be broken, where we close below it? Or we'll see another fluctuation like in the past days, just the market taking a breather, whatever the case may be, that's what I'm going for. I'm speculating towards. Then we have the Dow, very much the same as the S&P 500. Okay, so 44,000 is that psychological round number, which we actually came today and fluctuated towards it. The low is 44.26, the high 44.245. So I am assuming that if we are to see some movement to the upside, it will be in the Dow, or perhaps not. Crude oil. All right. So as fear of a World War III starts to just fade away, then therefore we're gonna start focusing again on demand, right? So therefore, we are hitting right now that first level of resistance of 69,125. We violated it, so we added. So let's just argue, for argument's sake, for trading's sake, for today, let's raise our level of resistance. Let's use the 50-day moving average as our second level of resistance, and then let's choose the 20-day moving average, which is the medium point in the Bollinger Bands, as our first level of resistance. So that'll be our target right below 70 round number. Let's keep the same levels of support, and let's be bullish. Be buying. Nat Gas, demand is gonna be there. It's gonna be there. Okay, so bullish. Same levels of yesterday, but they haven't been touched. So they haven't been touched. Can't move them. Gold. All right, so gold, one can say the bullish case for precious metals is on the back burner onto the current market euphoria to size. Surveying the markets 1 week after Trump's victory, animal spirits have been reawakened, highlighting that the S&P is at 6,000, Bitcoin is behind 100,000, and the US dollar is flying. While the air has been taken out of the asset, with gold current fall of around 8% from that high, it's exactly in line with what happened in 2016, implying gold current floor nearer to the 200 moving average, which is around 2,420 to give it a round number, but there's 2,424.83. But so that's where we could probably be going towards. We are in a downtrend as per technical analysis terms, where we have at least 3 consecutive higher lows and lower lows. So that right there itself is the consensus for the market to continue to trend lower. So 2,500 is our target. We have rebounded off that first level of support. So I'm going so far for selling gold. Silver. Silver is fluctuating below that first level of support, but it recovered. So let's see. Then copper. Got copper right here. $4, round number, psychological round number, rebounding off of it, well, close to it. The low is 4.0091. All right, so it's 4. Rebounded off of it, moving higher. Let's see. It has rebounded strongly, and now it's in the green. Since we are below that, so let's just use 395 hours a second. Let's keep $4 for as our first level. Bitcoin, oh boy. So Bitcoin are 100,000. Now before I was very skeptical about Bitcoin, the cryptos indeed. But now, everything because of who's gonna be in the White House and who is pro Bitcoin, and he's saying that he's gonna make the United States the crypto hub. So if that's the case, why go against that? Just whenever you see dips, buy the dip. Just like in buying the stocks, when you say, buy the dip, buy the dip. Well, buy the dip on when crypto falls. So that'd be the case. 84,000. So this puppy, when will we reach the 100K level? When? Well, when would that be? If we only had a crystal ball, right? All right, so moving higher, just being long. 100,000 is right around the corner. We're gonna get there. I mean, Elon is gonna be there, on there too. So he's got his. Crypto is gonna be the place to be. All right, so in the US, in the euro, as the pair prints its its fifth consecutive session lower, and is testing its lowest level since November 2nd of 2023. And let's just go back all the way to So here we are. Okay, so this is the market is at 1.05 to 83 to 81. That's the first. That's the second. So now in the first. So now we're going backwards. We'll reach this low of October 4th at 1.04526. It seems like it. It seems like it. This retraction from its September 25th high right here. Which 25th, right? 23, 25th, 26, sorry. The 26th high of, what is that high? Of 1.12017. It's retracted right around 5.96% or even more. So let's just use that. 1.12017. And I'm gonna eye this about 6%. Let me see. 6% is 1.05295. Right, it's right. So 1.0527. So it's around 6%. And with the German CPI coming in as expected, market participants took it as a weak data. And why would that be a weak data? It's weak data because it goes against the easing cycle that they are currently in. This means a level of inflation was already priced into the direction of the euro because the euro continues to add lower versus the US dollar. Okay, so you can speculate that the euro will continue to move lower. We already bounced it off the one of 1.05 levels. So I'm gonna use, what I'm gonna do. That's the second one right here. Somewhere around here. Let's do that. Okay. So that's for the euro. The pound. Let's look at the pound. So the pound is getting pounded. The wire is getting pushed lower. So we have broken the first one. We've bounced off the second one. So 126 is going to be the first one, and 125.5 the second one. And yes, I know I'm doing this just by eyeballing, but I am also using round numbers, psychological numbers. You could go back and look for previous levels of volume clusters to use as reference for support. But that's that. So let's lower our level of resistance. 127 and change. And our second one will be 128. Okay. We are fluctuating below the 200-day moving average. So that's pressure to the downside for sure. And we'll see more pressure to the downside as Mr. Dollar Index continues to climb. 107 is right around the corner. So let's use 107, 100 and change. And 106 as our psychological support level for the dollar index. And is gonna be It'll be one of those moments where when you see this at 107, you will see more pressure in the euro for sure, the pound for sure, and the metals for sure. Commodities indeed also, because obviously international buyers will have it more expensive to buy crude oil in dollars. All right, that's it for me today. Have a great trading day, and I'll see you tomorrow.